2 weeks ago, the question was whether the Fed's next move might be up. These past 2 weeks, the economy pushed back. Welcome to Realpage Economy Express. Let's get into it. Start with the jobs report, because for the first time in a while, it came in negative. Forecasters expected a solid gain, and instead the economy shed jobs in July. Unemployment actually fell, but for a familiar reason: people leaving the labor force. Now, revisions erased over 100,000 more from the prior 2 months, and wage growth is the slowest in over 5 years. For our industry, that really matters. Paychecks are what forms new household. And consumers are starting to act like it. Retail sales fell in July, the steepest drop in over a year, and sentiment gave back its summer rebound as gas prices crept up again. But there's something bigger going on. For 4 months, inflation has been outrunning paychecks. And when real incomes shrink, people pull back. And what about inflation? Well, it is cooling, just not fast enough. Consumer prices barely rose in July, wholesale prices were flat, and the annual rate ticked down. But we're still sitting well above the Fed's comfort zone, and energy still costs a lot more than last year. Now the Fed. This week's minutes from the July meeting showed the most divided vote in years. 3 officials wanted to raise rates on the spot, the first triple dissent in a decade, and many more said tightening would likely be needed if inflation stays put. Then the soft data arrived, and markets dialed those odds back. A committee split down the middle. Now, housing got squeezed from both directions. Builders broke ground on far fewer homes in July, one of the weakest months since the pandemic. Permits went the other way, and apartment permits led the game. So construction is slowing, but the pipeline behind it, especially on our side, is filling back up. Now, buyers are feeling it too. Existing home sales slipped again in July, and pending contracts fell to their lowest level since January, after the highest mortgage rates of 2026 landed in the middle of the selling season. Rates have eased a little bit since, but not enough to change many minds. So where does that leave us? Well, we got a softer job market, a squeezed consumer, inflation cooling too slowly, and a Fed that cannot agree on which risk matters more. For multifamily, what matters most is that people keep their jobs. And so far, they are. Hiring has cooled, while layoffs are still low. The question for this fall is, which blinks first, the economy or the Fed? Thanks for watching Realpage Economy Express. We'll see you in 2 weeks.